hello, ladies and gentlemen. This is Hugo Quintanilla from Long and Foster, North Potomac, Rockville. It is Monday. Thank you so much for tuning in. This is not the live at 5, so your clock isn't wrong. I'm just online a little bit earlier than usual. Today, we have a special conversation with Marvin Vigil, a mortgage loan originator in the area. I'm going to introduce you to him. We had a little bit of technical difficulties. We were going to be on earlier in the day. So we thank all of you for the patience. And yeah, I will get on that on my part because that was my bad. Without further ado, let me show you guys Marvin's information in case you got to get in contact with him. He does speak Spanish, so more than anything else, I wanted you guys to have a Spanish-speaking loan officer. And I know that I'm doing this all in English right now, but the intention is that eventually we will be translating this over and having more conversations in Spanish only on Spanish-only channels. So I wanted to introduce him to you guys because he's been a very close coworker in getting people educated on what they can do in real estate and really the magic of real estate. So we're going to ask him a few questions today. If you guys have your own questions about mortgages, feel free and direct them to him or another mortgage professional, but he's a great resource as well and can answer any question that you might have in either language. So Marvin Vigil, thank you so much for coming to the kind of little chat that we have going on. I really do appreciate you and your time, and thank you so much for your patience. I know I messed up that link. How are you doing today?
Doing great. How are you, Hugo?
Good. Let me take this off the screen and then we will get started, my friend. So Marvin, I was looking at your history, and you've been in the industry since 2012 at Eagle Bank.
Yes, sir.
Wow, how'd that go?
Well, I was lucky enough to just by chance I was able to to hear about a job opportunity at Eagle Bank. At the time, 2012, at a time in October, there was a nice boost in mortgages around that time. Rates were pretty low at that time. I think the housing market was recovering from 2008, so it was really starting to take off. So this company was getting a lot of loans, and so they needed help, and it was just by chance that I was able to decide to try it out. I literally took the job on as a temporary hire, which pretty much they told you that if once we don't need you, we're going to let you go. But
Oh,
took so well to it that even as a processing assistant, I was offered a permanent job after the business slowed down a little bit. So it just became something that I started to like. I started as a post closer. Pretty much all I did was assist with the sale of the loans after the loan closed. Um, most one thing people notice. Most people don't know that their loans most of the time get sold to another bank. That usually the company that does their whole loan, they'll do the process and do everything, but then they'll sell it to a bigger bank that'll pretty much be the servicer of the loan. So a lot of people that own homes know that, and more people that buy, they'll understand that as well. It's a big practice in the industry and happens everywhere, and it's not anything different. It's just the way it goes. The bigger fish are going to always be getting their food. So and I was able to enjoy how that worked. One thing I really liked was once you started seeing how that part of the loan works, the post closing part, you started understanding how the beginning of the part of the loan, how it started when it became into processing and through application process and everything. I started seeing how other coworkers did their job as well. So the more I learned and everything, I was able to from then go and get a job as a processor in there in the same company, and I began processing loans, and started doing that for a couple of years. Enjoyed how that process worked. Processes, I think, I know are at least the three top people in a mortgage company. They do a lot. They handle getting that application in to make it a loan and get it into underwriting. So it's a very, very good job. And like you said, I am bilingual, so the company decided they were going to take advantage of the fact that I could speak Spanish. So I became a loan officer assistant for a Hispanic loan officer, and I assisted with with getting applications in and getting documents in and things like that from clients. So that was another different step. And then towards the end, I moved into compliance. I was the compliance coordinator in our job in our company. So that was probably the best job I had throughout that whole period. So a lot of details go into it, a lot of responsibility to make sure that we're following regulations and everything. We're lending the right way. We're taking care of our clients, and we're not discriminating against certain people, things like that. And we're on top of us doing everything right, I also had to be the backup to make sure that I checked up on everything we did to make sure everything was done right. There's regulations that go into everything. We have as lenders, we have rules that we must provide our clients with responses in a certain amount of time. We have to respond in a certain way. If for any reason there's a reason why we can't do a loan for a client, we have to let them know why. We have to explain to them why we couldn't do it, and we have to provide it in writing as well and make sure that they understand why this was done in a certain way. So it's a big part of it, and you know in in late 2021, I decided I wanted to take a chance into originating loans. I had seen the process as it went. I had seen all the different parts. Always saw all the loan officers in there. They were the people that would get all the clients. They would always be talking to somebody. It seemed like they were always the busiest people in the office. So I enjoyed how they did their job, and I decided to take a chance on it. And ever since then, I've been working as a loan originator. Just a couple weeks ago, I decided to take a chance with the new bank that I'm in, ACMB Bank. It's a local community bank in this area here in Frederick, Maryland, also located in Pennsylvania. It's a very good bank. In the last couple of months, they've obtained different other banks they merged with as well. So it's growing, and we're just doing our best. And it's a company that has a couple different programs that my other company didn't have, and I enjoy that aspect as well. Obviously, Hugo, you understand that right now there's a housing shortage, and people have to look at different avenues to get into homes, to get into their dream homes. This company is also very big on lending for lots and also lending for construction. And they've really taken it to another step where they're very hands on how a construction loan is done. They handle all the draws. They handle how the process goes. So it's a new way, where people can find a nice place that they like and they could build there and they could build the house of their dreams instead of having to go around looking for it. But that's just another thing that people are dealing with nowadays.
That's fantastic. Goodness gracious. And I'm so glad that you brought that to my attention, because that's actually something that we're going to talk about later on in the week, about buying a plot of land and developing it versus going and buying a new construction on your own. And I know personally your ability to be able to provide certain loans for certain people was paramount for why you worked with certain companies. I
Right.
congratulate you, because that's a huge transition, a huge move that's happened in the last few months. I wish you all the best of luck. Guys, if you want to work with Marvin and find him online, you can scan that QR code up in the corner and it'll take you straight to his company's page, and you'll find his information there. You can apply, and then always remember to follow up with him so that he can follow up with you directly about your application or about any questions that you might have. We'll have him give all his contact information at the end. You had me thinking a lot about the ups and downs of real estate and what has happened in the last few years, and how, I guess, tumultuous it has been. Like you said, you mentioned that there were companies that are being bought out, and the bigger fish, will eat the smaller fish. That's, if for the normal layman, the person that's not in real estate, that is sometimes a little hard to understand that, hey, this person just sold my loan somewhere. But it's
Right.
very common practice. There's nothing under the table happening because there are these rules and regulations that are in place. And you have seen the difference. You came in after a lot of the big peak and big crash of the market happened. So seeing the market shift for you so dramatically, you have a little bit more experience when it comes to the average person that maybe started about 5 years ago. How do you cope with the stress or uncertainty of the housing market, and how do you kind of work your knowledge into the future trends that you're paying attention to?
You know, right now I see, obviously, there's people out there right now that are saying there's no way I can buy right now. There's the rates are too high. This is too much. I'm not going to be able to make these kind of payments. I'm gonna be losing money if I buy now. Those kind of things. You get a lot of people saying that. You get people that are kind of being priced out of homes that they thought they could afford before, but now because of the market the way it is, sellers are seeing that there's a housing shortage, so they're obviously they're gonna try to charge, they're gonna price their homes a little bit higher, or whatever they can get, which is part of how it works. Almost anybody would do that, but I see that, you know if you go back years, you look at rates per some of the years. We're actually at a decent rate right now. And if people think, this 7.5% interest rate right now is too much, you also got to understand, if you go back 10 years, people weren't making what they're making now. Income wasn't what it is now. So it's obviously it's different now. And also another thing that I will see is, the market is tough right now, but there's more regulation was put into, so what happened in 2008 won't happen again. Regulations have been made. The government has stepped in, and companies aren't like they used to be before. They're very strict on how they lend. They make sure that they're lending to the right people. They're making sure that they're lending to people that can borrow, that can make payments. So it has become better. And so what I would say is, if you're holding off because you're thinking rates are going to drop, or because you're going to overpay, you just got to understand that, the more rates drop, the more prices are going to go up. So you're kind of dealing with a double-edged sword right there. I think, you have to ask yourself, if you're renting, if you're saving right now to buy or whatever. You got to think, what am I paying in rent, and what can I afford to pay as a mortgage payment? And that's pretty much what I would say. If you feel like you can budget for a mortgage payment, now is the time to buy, because whatever housing is out there, that's what you should be getting into. Every month that passes by that you wait, you're losing on equity. You're losing on getting a home right now, and you're losing on getting something that people are going to be fighting for a lot more later on. Like I told you, every no matter where you look, you can say, people will tell you there's a housing shortage. There's not enough houses for all the people out there. So a lot of times it's like waiting is going to be, you're going to end up being like that game where the chairs are getting taken away from you, and at the end you'll end up having to pay more. So I would say considering and planning, and that's another thing. Is like, it can't be, just some off the wall thing saying, I want to see if I can qualify. You have to start, you have to get started in a certain way. You have to check your credit. You have to see, you have to kind of do a little bit of research, your situation. What kind of job do you have? That's my job. That's my career. That are there loans for my type of job? Those are the kind of things that you should look for. If you don't have that much money to put down, hey, you can look for, hey, this is going to be my first time buying a home. maybe I can get some down payment assistance. Maybe I can get help, and all that kind of research is that's why, you could, you need to kind of get started and apply. And one thing that I would tell people is when you apply with a lender, it's not like you apply and you have to do everything in a month. Sometimes this process can take months. It can take a year, and this is what this is what we do. I have clients that I work with for various months because it takes time for them to get ready. I've had clients that applied, and we have to help them out with credit repair. We have to kind of make sure that they understand what they can do. If they don't have enough money to do all the closing costs, we have to try to kind of maybe work a way to we find a seller that's going to help out with a little bit of the closing costs. Maybe we can find a way we can let them know there's ways a family member can help you with a gift for that kind of stuff, things like that. You can actually take money out of your 401k to help out to put down, all those kind of things. There's so many options that, like, you can't just say to yourself, "Oh, I don't have the money, so I'm not." The more questions you ask, the more you'll find out that there's a lot of different avenues you can take to try to get into a home.
I love that. I love that. That's so true because it's the more that you ask those questions, the more you get curious about the matter, the more you uncover how easy it really can be. What motivated you to buy your first home?
Um, when I bought my first home, I definitely, I came over to this country when I was 7 years old, and my parents brought us here, to start a better future for us. They wanted better things for us, so that's what most immigrants come to this country for. They're looking for something better, and when we came over here, that's what they were looking for. I remember we were probably, I think, when I was 14 years old when our parents got us our first house. I can still remember this. My dad and my mom got a mortgage rate at 18.5% at that time. This is back in 1993. At 18 and a half, they bought us our first townhome, and we were the only kids that for Christmas we actually asked for a house. Most kids asked for toys. We actually wanted a house in the backyard to play in, and that's when they got us into the first home. And so I've always had that understanding that this is part of the American dream to own your own home. And when I got to a point where I felt like I was able to, that was my next step. To be able to own my own home and be able to start my own family, and those kind of things that you kind of just feel out because you get to a certain age and you know that it's time. And that's how I felt when that happened.
How did you choose your lender when the time came, or were you already in the business?
That's a great question. No, no. When I bought, I didn't know anything about the lending process or anything like that. All I knew was I got advice from my parents. I got advice from a couple of family members, and the way I actually decided to do it was I decided to go with Bank of America because at the time I was banking with Bank of America, and I just said to myself, these people know that I have money saved. They know how much money comes in every now and then. So I thought they would be the best to work with, and I knew back then most of the time when you got your paycheck, you actually took it to the bank and you deposited it. So I remember walking in there and saying, I want to talk to somebody about loans, and that's how I got my first loan.
Oh, I see. Were there any challenges or difficulties when you with that loan? Because the biggest complaint, and I've personally have had great experiences with Bank of America. They have programs that are 100% financing and are involved with such programs like that. I've had great experiences with such loan officers and agents from those organizations. But were there any difficulties when you took out your loan, or was it pretty smooth sailing?
I think my only difficulty I could really say was I understood a little bit of how a loan works. I understood how to come into to do a loan, and everything. But the one issue I had, I think I wasn't explaining things as much as I would have wanted to. Um, Later on, I found out a couple of things that if I would have been explaining to those things, it would have made it easier. I definitely did not understand how closing costs worked. It actually came close to making me walk away from a deal because I just didn't understand how these extra charges worked. All I saw was a bunch of numbers, and all it said was closing costs, and pretty much I was told that this is part of the deal, and everybody has to pay for closing. But I felt like if my lender at the time would have said to me, "Hey, this is why you're paying this property tax. This is why you're paying transfer taxes. This is what the county is asking for at time of closing. The reason why we're taking these extra insurance payments up front is because escrow. I was never explained to what escrow meant. If I would have known that this escrow was pretty much a little bank account for me that was putting my money in there so I could pay these things off, then I would have been more confident. And I think those kind of things. If obviously, as somebody who was I bought on my own, and I bought I didn't put that much down. So at the time, I had to pay mortgage insurance. You know, I think little extra tips that could have been given to me about when mortgage insurance can be taken off of a loan. Those kind of things. I would have liked to know more. If I don't know if most people know that you can actually, you can take a home that appraises for a good amount, and in a couple of years you can have it appraised again. And if it appraises over this amount, you can actually get mortgage insurance taken off because you're over the amount that you borrowed already. So it can make it can give you another option to get those extra payments off of there. So those are kind of things that I wish I would have known. But overall, I felt like it. I had an understanding that buying a home is a big responsibility, and I felt like I was when they qualified me to be able to buy it. I had everything in line that I knew that no matter what, that monthly payment was going to be made, and that's what was important to me.
I love that. I love that. That actually leads me into my next couple of questions is how it kind of changed your lifestyle and how you kind of got ready for the mortgage. You've been dropping huge gems, and I just want to reset people right now in case they're just tuning in. This is Marvin Vigil. He works at ACNB Bank, and he's a resident loan originator over there. He speaks English and Spanish. He's just talking a little bit about his experiences in the mortgage lending field and also his personal experiences with purchasing a home. He was just telling us right now that just the sheer fact of having closing costs not explained properly or in a way that he felt comfortable, how much that could have impacted his deals. So little things like that. Just to get back to my question, you said that the mortgage payment was of utmost importance to make sure that that was taken care of. How did you prepare for getting ready to get a loan first?
Right. That's a very good question. One of the things that I did was obviously I actually at the time I was single. So what I did was I made sure that I when I was renting I had a good roommate. I got a good roommate with me. This roommate was taking care of their share. I made sure that this roommate wasn't just a friend or anything. It was somebody who I knew was responsible, who was going to be able to make their payment on time as well. And when I bought this home, I brought this up to them, and they said, of course, they would still want to rent with me. So then, when I decided to buy this home, I knew I was bringing somebody in behind me that was going to be able to make their share of the payment. That was going to also help me in buying this home, and that's for a young guy. Well, I wasn't very young, but I was 31 at the time. At that time, though, I felt like that's what I needed. I needed to be able to supplement some more income to be able to get that payment done. But I chose somebody that I knew was good at was going to be able to help out, and needed a place to live, and they were going to be able to make their payments on time. And that was another thing that it was actually even good because this person became a friend of mine, and 3 years later he was able to buy his own home because he was saving money and by only renting out a room.
Can you believe that? That's incredible. So both of you guys ended up rooming together and then getting places within like 4 years, basically.
Exactly.
That's incredible. How did you balance your goals and your financial expectations and your career with your mortgage? Because this is a pretty substantial chunk of income for most people. We're talking almost a third of their monthly gross just out the window. How did your lifestyle kind of change? How did you tackle those challenges?
Absolutely, and it definitely. I think if you decide to jump into home ownership, you have to be ready. You have to be fully 100% into it, because there will be a little bit of a struggle here or there. There will be times where you're maybe your first 2 years of home ownership, you won't be able to take that vacation that you normally take. But this is part of it. You're going to have to make some sacrifices to be able to do this. And as you start making your payments on time, everything is going well, and you start getting to used to having that large payment monthly, you'll start to balance out your regular life in a different way. You'll start to notice that things that you used to do before, you can adjust them in a different way. You don't have to do them at a certain way, because your most important part is should be to be able to stay in your house, to keep a roof over your head. It's one of the most important things that we do in life. And so I definitely I felt like even though I thought I was ready for it, I think it even made me help grow even more, because I definitely always thought about that fact that it made it it really goes into everything in your life. You have to make a payment when you're at work. You're going to take work a little bit more seriously. You can't go and get in trouble, because this is part of the source where your income comes from. So
Right.
those kind of things, it makes you grow up, I think.
It
And
does.
then,
100%. Okay,
and
I
it's
can see that so much. And it's just, as you develop and as you grew in your career too and started making more money, it probably got easier to pay this off as well.
then you start to kind of become a little bit more mature as far as your home. You're taking care of a property, and you have to fix things here and there, and you have to make sure everything's clean. And I think it definitely helps you mature a lot.
Do you still own your first property?
I actually do. I still I bought this I bought this house actually in 2009, and I still have it.
Congratulations. Is it going to be part of your portfolio forever?
Um, you know, it's one of the things I advise people, that they can. I always tell a lot of my clients, for some people, if they're looking to maybe become investors later on, things like that, um, paying a 30-year mortgage is not the best thing. I always tell them, refinancing at a good time, you can get some money out of there. You can take money out of your home, out of your home's equity, and use it to invest. You could buy a rental property like that, and you could get income that way. But everybody has their own reasons why they have a home. The reason why I stay in this home and why I want to be in this home is because I was lucky enough to be put by in a spot where I am literally 6 minutes away from my sister, 10 minutes away from my parents. So to me, the most important thing is family. So the fact that that's where that house is the fact that you'll probably have to. I'll be there for probably forever. So that's one of the reasons. But I do advise clients, if they are, that is a great opportunity to become investors and to become renters. To they can you can take a home that you've been in for a while. You can take some equity out of there, take 100,000 out of there to help you buy another place, and then there you go. And that's how people build portfolios. And I've seen, working in this business, I've seen some people that, they're not, they don't look like, the regular investor with a suit and tie and everything, but they own like 6 properties because since they started, they've always been doing that.
Absolutely, 100%. And it's so shocking to me when they're young. And it's like this guy that you just wouldn't think, and like just a tracksuit, and it's like some Jordans, and it's just like this guy has like 20 properties under his name. And it's amazing. It's amazing, really.
I
Um, Going
man
back,
works at a
I'm sorry.
He works at NIH. He probably has, I believe, 8 different properties in Washington D.C. And what's funny, he has a couple multi-unit properties, and he rents all these properties out. And he actually lives in one of the units that he rents out. And this guy is amazing what he has done. In I think 11 years, he has been able to get 8 different properties. And if obviously I can't share his story, his details, but the way this young man did this, he's just a regular guy. He just, made some sacrifices here and there to buy him one property, then did this next, and now he's, pretty much reaping in all of that. And he's only like 38. So,
Oh, can you believe that? And it's you can actually help people do that financially because you can prepare them to take that money out and make that investment and make that hard next step because it's a risk, but high risk, high reward. With
exactly.
your yeah.
No, exactly. I'm agreeing.
Oh, no, no, no. With your experience, I wanted to ask you, what are some misconceptions or kind of myths that you run into all the time that people, when they come to you, you're kind of shocked that you keep seeing this again and again that people just don't know.
Um, I think obviously, before when I first started, the mortgage interest was a little different. When I first started, I can remember we used to when we used to do our loans, we used to have these giant files folders, and everything was pieces of paper and pieces of paper, and every single step was different, and it would and we would have to do everything by paper, and now everything's electronic. Back then people would actually go into an office and fill out an application. Now people can scan a code and they can go ahead and apply online. And there's some companies that have where if you enter a certain amount of information, it already knows who you are and it can pull some of that information in there already. Those are the kind of things that we have in this with technology now. So people out there, they definitely understand, and they can go online and they can ask questions all the time, and there's many resources that show them what's going on in the market and everything. But to me, misconceptions are, I would say that just what we were talking about, investment properties. I bet you there's a lot of people out there that say, oh, I have a little bit of money saved up and I could buy an investment property right now, but I can't afford 2 mortgages. That's crazy. People don't understand that, a guy like you can actually show them a place that already has a person renting this place out already. They know that, this can help them with that, with qualifying, because there's a qualified renter already living in that home. So those kind of things, I think people don't really understand, and that you don't really have to start making the full next mortgage. You can actually already get help, because there's real estate agents out there that know of many different properties, many different sellers that they already are renting their homes, but they decide that they want to sell, and they already have people living there already, and that's something that can get you in there a lot easier. They can get you qualified a lot easier. I say other things is, obviously everybody you always used to have the 20% down payment myth. If you have 20%, that's great. Good for you. You saved your money, and you took the rules like you were supposed to, and you did it right. But you don't have to have that 20%. And people always say, my brother said, I think my brother was telling me this, and he's like, I don't want to pay mortgage insurance. And I'm asking him, you telling me you have like 740 credit, right? Mortgage insurance is going to be barely anything for you. The reason why companies insure the mortgage is because you're a risk, and the amount that they charge you is for the amount of risk that you're bringing. If you have a great credit history, your mortgage insurance is not going to be that high. So those kind of things. And also, just like I told you, even though I'm going back on the fact that I'm probably going to stay in this home till I pay it off. Another misconception is that a lot of us, we think, oh, we buy a home, there we go. We got 30 years of bills, or that bill for the rest of our next 30 years. Well, no, you can refinance. You can do many different things. You can, you know, you can get money out for certain things. Like I was talking to this other client. I tell them, to me, my house is like a nice savings account that people don't understand. I've had this house for a long time, and there's equity in this house, and no matter what, God forbid anything happens in my life, there's money there that I can use for whatever happens in my life, and hopefully, it could be a good thing, it could be a bad thing, but whatever it is, that's what you're doing by owning a home.
Fantastic. Like I just the whole conversation, you have jam packed it. I've asked these questions to other lenders, and it's just every question I've asked you're just a wealth of information. Marvin, thank you so much for your time. Really, it has been a pleasure speaking with you. I know we got a little bit late into the start, but you have been worth the wait. Guys, Marvin Vigil, can you please do me a favor, Marvin? Can you tell them where they can find you online, your phone number, email, and best social media handles?
Oh yes, so Marvin Vigil, I work for ACNB Bank, residential lending. I I'm the Marvin Mortgage Pro on Instagram. I'm also on Facebook. Honestly, I'm all most of the I have a Yelp page. You can find me on there as well, and Google Business. But my phone number is 240-997-5448. Email is mvigil@acnb.com, and those will be the best ways to reach me at. You can definitely apply online if you'd like to, but I like taking phone calls. I like getting people to call me. I like if you want to call me and tell me, hey, I want to talk about this, and you want to set up an appointment to talk about it. We can talk whenever you like. Just like most people. As lenders, we don't work a regular, 9 to 5 job. So we know that just like there's people that don't work a 9 to 5 job. So if you ask me, hey, I'm Marvin, I'm not gonna get off of work till 8:30. Can you call me then? Absolutely, I can call you. And we can do. I can send you a Zoom invite, and we can do a Zoom meeting to go over all those details. Anything that is needed. And the reason why I say I like to get a phone call is because I like to know what's best for you, and I'll work around that. And as I'm talking to you, you're gonna notice that I'll keep asking you little questions here and there because I want to gain what you're looking for and what strategy you want to start going for. Because when you tell me what you're looking for, I'll start setting up what I think you can fit into. Yeah, a couple questions here and there, and there's some. So applying online is great and it's easy for a lot of lenders. But if I can gauge what you're looking for, if I can ask you an extra question that maybe the loan application online doesn't, that'll definitely help me ensure that maybe I'm getting the best loan for you. And then if you're like a new first time home buyer or anything like that, you need a certain type of real estate agent to work with. I have many people like Hugo right here that I can let you know that you can call up, and I can see who fits with the right person.
Key, huge key. And that's what I was going to comment at the end, that Marvin knows tons of different real estate agents, so he can pair you up with the right match for you, because that's what really this is about. It's about doing what the customer envisioned and getting them across the finish line. Marvin, thank you so much for your time and for answering these questions with me today. I really do appreciate it. Guys, thank you so much for tuning in. Really, these sessions are for you. So if you have any questions, feel free and direct them either to myself or to Marvin. Leave them in the comments, reach out to us. As you heard, he would be more than happy to get your call. So thank you again, Marvin. Thank you again, guys. And we will talk again later today, actually on the live at 5. So take care, guys. See you soon. Thank you, Marvin. Bye-bye.
Right. Right.